Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors. November 12th, the Moose and I are at an off-site meeting. Just give some coverage to the markets for you. Some of the things we looked at, some of the things we did this week. Really on the equity side, if you look at the broad markets, flat week. But underneath, some of the sectors are really starting to come alive. Think about the COVID ending, back at it, back to life type of sectors. One of our holdings in Tactical Trend, Airbnb, boom, it's really ripped higher. So hotels, cruises have traded well. So you're seeing some of those sectors work well. I thought it was interesting to bring to your attention today, I'll put a chart up now, off of the infrastructure bill being right on the doorstep of being passed. Some of the ETFs that we're interested in. By the way, we already own some of these, but some of the ones we're interested in, and you may be interested in on your own, in your own portfolio. But I've broken these down into some of the areas that will be covered by the Jobs Act and the infrastructure bill. Take a look at broadband access, clean water. As you know, we own PHO, we call it, in our US ETF strategy. Energy transmission, electric vehicles. You've had a nice run, but maybe more there. In terms of roads, bridges, infrastructure, what are some of the areas that we can get some participation in on the ETF side? So I share some of these, and the important thing to look out at on the far side, year to date, many of these have underperformed the S&P. So it's not as if we've missed this trade or you've missed this trade not identifying it. Maybe this is the next leg up. We saw plenty of strength in basic materials this week and in metals, industrials. Let's see what happens next week. Moose?
Yeah, thanks, Matt. Whereas last week the story was the Fed starting to announce their tapering program, this week the story was inflation. We saw the CPI come in on Wednesday at 0.9 for the month of October, trailing 12 months 6.2. That is a big number.
Big number.
And we have a little chart to show you, and it's just basically the difference between the headline inflation rate and the 10-year bond yield, and it goes back 10 years. And if that looks like a ginormous gap at the right-hand side of the page, it is. It's something the Fed is going to have to deal with. There's plenty of talk on maybe the Fed having to raise short-term rates, next year. One of the things we saw this week was yields going higher across the board, but more on the short end. So the 5-year bond, up to about a 128 or so, something like that, up, 17 basis points. 10-year bonds at a 158, up about 15. 30-year bond not up as much, up to a 195, up 6 ticks. The point of all this is that when you start to see the short ends rise, that starts to mean that the market is starting to anticipate the Fed having to move sooner, and the market tends to get out in front of that. So it's one thing that we're watching. Again, it's why we manage portfolios on a barbell basis, whether they're taxable or tax-free. Munis this week hardly moved at all. And I think part of that is a recognition that if they got some success on an infrastructure bill, probably higher taxes are, going to follow along. And so munis were pretty steadfast. But there's no question that the thought process is that interest rates are going to ratchet up down the road and probably inexorably for a little bit.
Yeah, and as long as that interest rate rise, the velocity of the rise can be contained, we're not too concerned about any degradation in bond price that we already own.
And we're not. And it's very important to realize, to go back to the beginning of 2020, and essentially the 10-year bond was at a 2%, and the economy was doing quite well, thank you very much, before COVID hit. So that's, I think, the important thing to remember.
Right. Outstanding. Well, thank you for being with us. We really appreciated the response to the survey. It helped us to try to focus on ideas that you'd like us to talk about. We'll continue to do that. If you are on our YouTube page and hit subscribe, you'll automatically be updated whenever we have a video, not just the Friday trading video, but maybe a midweek video on a day where there's a lot of velocity to the market, or a deep drawdown day. Share our thoughts with you at any point. Just subscribe and you'll be alerted. Have a great weekend.
Thanks, everyone.